All right, so let's talk about the box strategy. So let's just put the box. Okay, let me make this white so it really pops on us. Okay, the box strategy. Now, we're going to use, again, DR, IDR levels are going to be the most important levels we use. Okay, so this is the RDR session. This is the ODR session. This is the ADR session. So Asian, overnight, or European, and then regular trading hours. The box can work in ODR or RDR, either one. So European traders trade the box as well, which is really awesome. And the rules are very simple. It's very, very mechanical. And let me just kind of break down the chart for a second, though. So when I'm looking at this day as an example for crude oil, okay, what I'm looking for is I'm looking for this box to be formed. And this box is basically the open. So the open of the day, which occurred right here. Okay, so this was the market open. And then the close of the session formation period. So remember, this, the DR IDR levels are based on the first opening hour. And so the 1025, the close of the 1025 candle is actually the start of the 1030 candle. And so that is where our box ends, right here. Okay. And because we had a box where the close is greater than the open, it's a bullish box. So I use blue for all my bullish candles. I know should be green, but I like the blue better. And so you can see the box sizes, these are pretty full boxes because they're taking up almost the entire range, right? But they don't always do that. So you can see here that here's a smaller box. Here's a smaller box here. And you can get kind of a quick visual identification of what kind of box we have. Here's a short box. It's about half the size of the IDR range, right? And so what we're looking for is, first of all, the formation of this box, which happens at 10:20 at the end of the 1025 candle or at 1030. Okay, and then we have our box formation, right? So this is one just like time and price, where we wait for 1030 DR formation. Okay. The next rule is we need a confirmation. Okay. And confirmation is a term that means that we break either the high, this range high, so the opening range high, or the opening range low. Okay. And we can do what's called a wick confirmation, where it kind of wicks up and then comes back into here, or a full confirmation where we actually close beyond it. A close is a stronger confirmation. And this indicates direction for us. Do you remember what we talked about last time, right? This gives us an idea of the directionality. Once we have confirmation, we want to see a box test. Okay? So we want to see, for instance, let's say that we go down. Okay, so we have a confirmation. We want price to test the box by either tapping it or even coming inside of it. And then we want to see price exit out. And when price exits out, we can take a trade. Okay, it's that simple. The rules are so simple. You wait for confirmation, you watch for the test of the box, and then actually there's rules on how you enter that are very easy. Okay, I'm not going to go into details on those, but the rules are very simple as to how you actually enter and execute your trade. Okay, so in this case today, we have a box formed. There's also, this is crude oil. So this line here is about where we would take our profit, our exit. This isn't as smart as the time and price trade. So time and price, we have some very specific target levels. With the box, we just use some very basic average levels. And so because it's an average, a lot of times, the price will keep going past it, or we don't quite get everything out of the trade that we could possibly get out of the trade because it's more of an average. So in this example, we come down and we have our confirmation. So we had our DR formation. Now we've had our confirmation. And now we're looking for a box test. Okay, so we want to come back into the box or tap it. So that we did do that. And then this is the other rule here. Okay, second close outside box. Go. Okay. So when we have two closes outside of the box after we've tested, then we can take our trade. Okay. And so let's see what that looks like. Okay, we didn't have a second close, so I just want to point this out. Okay, we came out of the box, we tested, right, confirmation, test the box, out number one, but then we come back in. Okay, now we're out, so that's close number one, close number two. So at this point, we can actually take a trade, and we need a minimum of 3R to our take profit. Okay, so do we have 3R to our take profit level? So if we put our short position on here and our take profit level is here, and actually in CL this is a 1.0, it actually goes right there. That's just a quick approximation. I'm not going to go into stop loss placement, but we do have rules on stop loss placement and where stop losses are supposed to go. So that's a stop loss possibility right there. Now notice we don't have 3R. And so what I would do is we'd move this up to where we have 3R and we would actually place a limit order. Okay. So there's a limit order right there. And we come up, we actually take our limit order. So we're in this trade. And let's see if we actually come back. And we need 2R before we move to break even. So the question is, did this move to 2R? Not quite. Okay, so we're roughly right there. We're going to keep going. Boom, 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 and boom. There we go. So that's a 3R trade, actually 3.25R trade that we took and were able to get as part of the box. So like I said, the box is very simple. You can see why this is a really great training tool. This is why I use this as a tool more for creating discipline than almost any other tool that I use, because it's just so simple, so easy. It's easy to backtest, and it's also very easy to trade, and it gets people in a mindset of being able to take a clear set of rules consistently, which is really great.